multiples, so they can stretch that out a bit higher. We also got lenders with no income multiples, so and their affordability assessments is a lot more relaxed as well. These specialist lenders, they're flexible with historic or even recent adverse. If you've had late payments over 12 months, a lot of our lenders ignore that. And even if you have had some sort of late payments in the last 12 months, as long as that item of credit is up to date, we have lenders that will ignore that and place the application on their prime plans. Rates from 2.8%, so they're pretty. It's not extortionately high, but obviously with the specialist market, these lenders are taking on a lot more risk than the high street lenders will be. So the rates are going to be slightly higher. Obviously, there's going to be a little bit more fees involved, but like I said, their criteria is a lot more flexible. Interest only and capital repayment options. We've got lenders that can work off projected income, which is huge, especially self-employed. If your year-to-date figures, like I said earlier, they're not looking the best, but next year they're going to be looking a lot better. Then we've got lenders that will be happy to work off that projected income, which is a big deal, I think, in today's climate, especially. Up to 75% LTV. So first-time buyers are accepted. There's a lot of these lenders don't have a minimum credit score. We can lend for any legal purpose. There's fixed rate options with no early repayment charges. So the good thing with the specialist mortgages is, you can take out a specialist mortgage for 2 or 3 years, and then potentially look to remortgage away from the specialist lender back to a high street lender, which that should always be the plan, really. These specialist mortgages are there to assist clients because for whatever reason they're unable to go down the traditional mortgage route, basically. And a lot of these lenders don't have restrictions on property construction types, which is good. Before I move on to the next slide, any questions from anyone or no?
Does anyone have any questions? You're doing well, Mo.
No? Okay. Yeah. No worries. Just let me know if I talk too much. Yeah. It's a lot of information I've put down here, but I'll try and get through it quickly.
Yes. It's good, so, because Sam and Sophie earlier were speaking about standard residential. So this is really good because you're extending the remit of the things that aren't possible usually. Yes. You can go there, so that's good.
So residential second charge loans. Now this is my favorite type of business to underwrite. The reason being is it is complicated, but because I've got a lot of experience around this, where and of course with residential second charges, they're very quick to complete. I think the average completion time is about 3 weeks to complete, and yes, it's just very simple from my opinion, I think. Excuse me. So sometimes you want to raise capital to do home improvements, clear some debts, put a deposit down for another buy-to-let, but you can't get further borrowing through your existing lender sometimes for various different reasons. And you can have the best credit in the world, you can have all the income in the world, but sometimes your existing lender may not be able to provide you with a further advance. For example, your circumstances have changed, you're not meeting the lender's income multiples. I've got a case now where the clients initially, when they took the mortgage out, Mr. and Mrs. were both on the application, but I believe Mrs. is now on maternity, so therefore I think the client was looking to raise around 60,000 to do some work to his new house. Obviously the baby's coming, and yeah, so obviously because of wife going on maternity, it's a change of circumstance. Affordability is a bit tight, so they can only raise a certain amount, for example. So that's a reason why you may not be able to raise the full amount through your existing lender. You may have just remortgaged and there's a shortfall. So like I said, if you've, I've got cases where there's the initial introducer was only able to raise, I don't know, 30,000, but they wanted 60, so they still got 30,000 left that they need to raise. So we can potentially help out there. You may have had a late payment on an unsecured item recently, or in the last 3 years, so they may not, your lender may not be wanting to give you a further advance in those scenarios. Not meeting the lender's minimum credit score. Lender's not happy with the purpose of loan. So I understand, if you want to raise some funds to purchase a buy-to-let, or if you want to expand your business, or cash injection for your business or something, some high street lenders may not have an appetite for that. Debt consolidation, this is a big thing right now. So a lot of high street lenders, from my understanding, they even if you want to clear some debt, some unsecured credit or whatever, and you've got credit cards and loans, and even though you are going to be consolidating them, a lot of high street lenders will still factor those items in for affordability, which doesn't make any sense to me, but it's just the way they work, I believe. Some lenders, when it comes to debt consolidation, they cap their LTVs, even loan amounts. Also, I think some lenders, they only allow you to consolidate a certain number of items for debt consolidation. I'm not sure why this is the case, but it must come down to risk factor for them or something. I'm not sure. You may not be able to get a further advance because you've maxed out with the LTV with your current lender. So if you're already on 80%, and that that's the max LTV the lender's going to go to, that you can't get a further borrowing with them. Already on a competitive rate of interest, just started a new job, so the lender may say, we want 6 months or 3 months employment with a new role. You need to come out of probation or something like along those lines. You may have just gone from self-employed to employed, so the lender might require, like I said, certain amounts of employment history from your new job. You've only got 1 year's self-employed accounts. Current year-to-date figures are low. Have little or no mortgage history, and you're already on a fixed rate with hefty repayment charges. So those are some of the reasons that you may face, where you may not be able to get further borrowing. Right. So second charge could be a far better and quicker option. You can take out a second charge as like a stepping stone solution for a couple of years, and then potentially look to remortgage in the near future. So our lenders, with regards to residential second charges, they can go to much higher LTVs, even up to 100%. If you're looking to do some home improvements, for example, it's pretty ideal, because when it comes to a couple of years' time, remortgaging shouldn't be an issue, because the value of your property would have increased by doing the home improvements. Our lenders are much more flexible with income, affordability. There's no restrictions around debt consolidation, so you can consolidate as many items. Affordability is really easy because you're going to be consolidating them. There's no restrictions around LTVs. Competitive rates from 3%. Very, very quick to complete a second charge. You're looking at 3 weeks on average. We've got interest only and capital repayment options available. You can raise very large loan sizes. You can raise for any legal purpose. So even if you want to raise for, you want to do some work to your buy-to-let, you want to buy another buy-to-let, you want to expand your business, no problem with our lenders. There's no minimum credit score with a lot of our lenders. They're very, very flexible with recent and historic adverse, like I said earlier on. We got lenders, as I said earlier, we can work off projected income. 1 year's trading accounts, where our lenders are happy to work off. Little or no mortgage history. If you just moved into a new house and you want to raise some funds to do some work to your new house, then our lenders are fine with that. A lot of high street lenders may say you've got to wait 6 months or 12 months sometimes. A lot of our lenders don't even need a valuation, so not, it's work off desktop valuation. Just means that you can get your money that much quicker, which is great. And there's fixed rate products with no penalties, so you can potentially take out a second charge, have it fixed for a couple of years, and then when it comes to you remortgaging it in 2 to 3 years time, hopefully you can remortgage and consolidate the second charge potentially. Everyone okay with that so far?
Yes, that's
Yeah.
good.
Okay. Right. So complex buy-to-let mortgages, first and second charges. Again, very similar, like I said before, you might not meet the minimum income requirements, not meeting the minimum credit score. You don't own your main residence. That's a big one, which we seem to see. A lot of high street, they normally require clients to own their main residence sometimes, I believe. You might have recent or historic adverse credit. Too much unsecured debt in the background. Some buy-to-let lenders don't like that on the high street. Lenders are not happy with the property type. Starting to see a lot of these. A lot of high street lenders, they may not have an appetite for, if it's a HMO, multi-unit freehold block of flats, holiday lets, or Airbnbs. Lenders not accepting expats sometimes. You or your family member used to live in the property, so a lot of high street lenders don't like that. Failing lenders rental assessments, and already on a competitive rate of interest with large ERCs. So our lenders, again, specialists. I think you guys are starting to get the picture there. No minimum credit score, rates from 3.5% on buy-to-lets first charges. As I said, they're not going to be obviously as competitive as the likes of TMW or some of these high street lenders, but as I said, their criteria is a lot more flexible. No minimum income, no minimum property value. They're happy with HMOs and multi-unit block flats, etc. Flexible rental assessments. The case only needs to fit on the tenancy agreement. As long as it fits on the tenancy agreement, they don't need to, they're fine with that pretty much. First-time buyers, first-time landlords, all accepted. You can raise for any legal purpose. Consumer buy-to-lets. So if you've lived in it before, or your family's living in it, our lenders are okay with that. Expats, property can be untenanted, and our lenders will still be happy to lend on that. Interest only and capital repayment, obviously. And finally, bridging and developments. So I'm starting to see a lot of these in the last couple of months. So these are some of the scenarios why you might require bridging or development finance. So downsize is a common scenario. So if you found a house you want to buy and move into, but you haven't got the cash available until your house is sold, also the speed of selling your current house may take a few months before it's actually sold. So bridging finance is perfect for that kind of scenario. If your property is currently unmortgageable, if you found a house that you want to move into, but you can't get a traditional mortgage, then potentially taking out a light refurb bridge to do some work to that and make it mortgageable. That is a good option for that. Auction purchase I've got 2 of these ongoing myself. It can be quite complicated getting everything done within 28 days. So short-term bridging finance is excellent for that. And if you've got some projects that development projects that you want to you've got builders and everything, and you've got a bit of experience maybe, or even if you've got no experience, we've got lenders that will be happy to fund your project pretty much, as long as you've got a good plan in place. So there's a lot of talking going on there. Sorry guys, I try to. It's a lot of information sometimes that
It
bring
is.
across, but I try to make it as less boring as possible. But I think that's it then, basically, guys. If you've got any inquiries or anything that you'd like to discuss, contact Tendai, and of course she'll get in touch.
Wow, thank you so much for that, Mo. Very informative. And again, really appreciate you being here today. I know you weren't well.
Yeah,
Thank you for making it happen and just releasing such nuggets. Many times our dreams or our hopes are stuck because we think we're stuck. Just the other week, we had someone who was termed a mortgage prisoner, really, isn't it? People who took mortgages with Bradford and Bingley, and they find themselves on an interest only mortgage,
yeah,
but now need to do home improvements. But Bradford and Bingley ain't around anymore, and no one will take their mortgage on, and they can't necessarily afford to do a remortgage. And
absolutely.
people like yourselves, you can help. So that is wonderful. And so it's just knowing what you need to be able to navigate your scenario and your story. So thank you